Yeah, good evening, everybody. This is just an update on the yen pairs and the Euro USD. I'm just limiting my analysis on the yen pairs for now and the Euro USD because these are pairs that they are going to present us with a very good opportunity very soon. Now, this is pretty much what we've had in front of us for quite some times and what we are seeing right now in the market. This is Euro Yen. I think past trading and update I did, I just mentioned the Euro Yen in per se. I think I just did a little analysis on it, and I will be using Euro USD, Euro Yen. Euro Yen and Pound Yen, they are somehow similar in their structure, but not in its entirety, but yeah, somehow very similar. Now, this is an update, and I want you to see what is going on in the market. When you don't understand structure and the direction of the market, you won't know what to do and where to place your order. You must know when to actually trade and when not to trade. You don't just plunge into the market. I've said that oftentimes. You don't just plunge into the market not knowing the structure that the market is actually creating. And there is no way of you knowing what structure the market is going to create. There is no way. And I said that in the previous teaching that markets correct about 70% of the time. Most of the trade that we do is in correction 70% of the time. So before we create another level of structure and all of that. And your understanding of structure would help you to know where exactly you are and what the market is doing. And it could be very, very, very difficult to actually see. And you can't just think that the market is going to do a structure this way. There's no way of knowing, not until it gives you a sign of what structure you will be expecting. So by the time I do and I finish up with this analysis, you will understand better. And I think that your understanding of forex should be getting better. I'm in some of these trades that I have not called for you because I knew how to engage my risk and all of that and tell myself when I want to actually get out of it. And I'll be showing you some things that are very interesting. And by the time you look at it, you understand why on the yen pairs I've not even given you, point of entry, because I must understand what exactly is happening before I say, okay, let's go in and fund. So this is what we have in front of us. So I will be switching back to the previous analysis that you're going to see now. This is monthly chart. And on this monthly chart on Euro Yen, I will quickly tell you that this thing has been in an uptrend. It's been making higher highs. And we are, that is what we are seeing at the moment. And I told us that from here to here, this is a support here at this level, and this is another support at this level. Sorry, a resistance at this level, and price came here to make what a support. So, and that's the support that we are seeing, which the price made at this level. Sorry for the interruption. I think I had to do that because of interference. So now, so this support is very crucial. And if you want to know if the price is in an uptrend or downtrend, the only way you can know is that, are we breaking new support or we are breaking to make a new resistance. And from here, you can see that the price broke this support now, just broke this resistance now, and it's trying to make a new high now. And we have told ourselves that when we have structure, before a structure ends, we should expect at least an 100% extension before we see any correction. So, and we said that from here to here, you know, back to this place, an 100% extension will be here, where we see these green dashes. That is where we will see 100% extension, you know, from here down to here. Then you take your fib extension tools from this line here to the up here, then back to the base here. The 100% extension we said actually should be here. Now, we now took this also as another structure from here. That another structure is in the making that has given us a recent resistance here and a recent support here. Then we say, okay, we're going to look for another extension, which is 100% extension from here, that if here from here to here, another extension 100% will be at this point. These are the areas we are expecting the price at least to engage before we now see a major trend reversal or a reaction. That is what we have said. So now we are still within this wave. And if you see the way this wave went up, it went up quite sharp, which means it's an impulse. It's an impulse. An impulse at this level before this correction, an impulse at this level before this correction. And price will not forever go in an impulse. So now we're now seeing this correction. So what kind of correction are we seeing? Now, and I told us that we regard this as a wave one, you know, and we are seeing a wave two. So if I quickly switch to the weekly chart, I want us to see the inner architecture of that. So this is the weekly chart now. So where do we expect? We expect that now this is a wave one of this new wave. Then in one of my analysis, I said, as far as I'm concerned, it's like wave five, which is the end of what the structure is going to give us. If you begin to count the internal structure of this one, which I can't do now, which is beyond, this is like a 4, and this is like a 2, and this is like from here to here is like a 3, and this is like a 4. And we are seeing the internal structure of wave 1. Sorry about that interruption. I'm sorry. These are things that happen that we have to attend to. Let me just continue. So now we are seeing 1 of 5. And after 1 of 5, which is 5 major, 1 major of 5, then we're going to see a wave 2. Now, I want you to listen to me and watch this. We should expect that if this is wave 2 that is in the making, this is weekly time frame. If this is wave 2 that is in the making, then, and this is the beginning of this wave 1 of 5. So wave 2 of 5, where do we expect it to normally end? We expect this wave to be at least 61.8 if it's wave 2, 76.4 is the average, but it can extend to 85.4 or not beyond that, not even 90 if it's wave 2. So now we can say, oh, this is an assumption. We can say this is an assumption that this is wave 1 on yen pairs, all of them. So if we want to pick up our fib retracement tools and bring this here, Then we go up to where it found a resistance at that point. And so 61 is here, 70 and 85. 85 actually is at the red area. So if I may do something, let me just use the red area as the potential point that we feel the price should visit. So let me try to do something. Just watch. Those levels are now completely marked. Completely marked level. So this is a 61, a 76, and 85. But where exactly the price will stall, we don't have a clue. We don't have an idea. There's no way of knowing except the structure that the price gives us. Now, we at least should see price get to this point. But most of the time, price would likely do a 76. Now, looking at this 50 EMA, 50 EMA on the weekly is pointing to the fact that we might find a support here. It's just suggesting, not until we go down, because these are things you have to also be looking. That means we have not even found support yet on 61.8. So, and if where are we at the moment in terms of fee? So if we do that again, where we are, we have not even touched a 50. So we are very close to a 50, maybe about a 48 or thereabout. So if we are at about 48 or thereabout, we still have some movement down. At least, if we are going to go down from here, which is the lowest, before we get to touch 61, that is about 240 pips or 244 pips. So 76, it's about 470 pips. So price can still go down between 240 and 470 pips. That is what we are saying before we see more upside. But even we are going to see more upside, do we think that price will continue to move down? Continue to move down? No, price is not going to do that. As the price is correcting, we'll be seeing upside movement as well as down movement. But we need to understand what the price is doing with this structure. And I did tell us that the structure that we are seeing is a zigzag because it gave us a zigzag. Now, with this, because price had not come to this and it has probably finished the zigzag here, let me switch to daily time frame. Watch me now. That's the daily time frame. These are the areas we expect price to still visit: 1, 2, and 3. This is definitely what price should do. Price should be here. This area, a strong possibility that price will be there. This area, we are not so sure. But the price, the structure will tell us if price will reach any of this area or not. Now, we said on the daily, this is A. And we said price has done B. And price had found C in this area. Price had found C in this area. That is what we can see now. Price had found C in that area. I'm going to do something to mark all those areas that price has found now. Price found C here, and B, price did B at this area, that's B. We can take this off for now so that we don't get confused with so many lines. We want to limit ourselves to areas that we think price Okay, so from here to here is an A and a B and a C. And we said this movement is a zigzag. And you know why we said it's a zigzag? If we do this in a zigzag correction, you expect a retracement of at least 50%. So you can have 50% of B wave, 50% of B wave, 61, 76, or 85. It won't go beyond 85 in a zigzag. That is the meaning of it. In a zigzag, it won't go beyond 85. So, and nobody will know what B wave is going to be if it's going to go beyond that or break the top to give us an extended flat or a running flat, or not a regular flat. If it has stopped at or stored at 90, we'll say it's a regular flat. So if you take this one down from A back to B, B stored at about 61.8. Where exactly we see this particular, so this is 61.8, but price may not, like I told us that this is an area you might just think that price, you're going to get a price action. Price may break it by a week that you can see, which is still allowed. But it doesn't take out the fact that it's a zigzag. So now, if it's a zigzag, we expect a C wave to be, if it's a zigzag, to be 61.8 to be 100 or 123 if it's a C wave. So, and if we take an extension from here, beginning of A to the end of A and to the end of B. So here is our 100. The price is 100 here, but 123 actually is below here. So let me take a price and say this is where a support and tell you where we expect 123. So we expect 123 here. So this price can still go a bit down to touch 123 at that level. But mark you, price will not, price can behave in an ugly fashion. Let me drop something also at 100 for you, so that you can understand what we are doing. This is 100, and this one is 123. Just follow the popular. Now, let me go to the internal structure of this on the 4-hourly. This is the 4-hourly. Now, again, this is A. This is a 5-wave structure, 5-wave clear structure of 1 to 2, and the internal structure of 3, 3, or 3, 4 here, to finish 3 here, and 4 here, and ended 5 here. So this is because the first wave that came down, price will not just move down, when they get to the end or just thrust down. You must understand the structure that we are counting. So we add this, and the way it came down collectively. If this price had come down in an impulsive manner, we might say, okay, we have just reached the end of the trend, and the price actually is coming in an impulsive manner. So if it's going to come down in an impulsive manner, we probably would have seen this kind of a candle, this turn around. So if we had seen something like this, and this turn around, like 1 or 2 of it, we'll say this is an impulse. So that would have marked the end of the trend. But now, price came down in a corrective manner, which is 5 waves. If you go on the 1-hour time frame, which I can't possibly do all of that, 1-hour time frame and 15 minutes time frame on Euro Yen, you will see the internal structure of that. That is 5 waves downward. Now, because it's 5 wave, we know that these are giving us that it's going to be a zigzag. And so if it's going to be a zigzag, so we expect that this price that is going up may get to where 61.8, which is here, 76 or 85. So we will not expect 90. And that's how to engage ourselves that this one had come down in a 5-wave format. And so it's going to be a zigzag. Fortunately, it created a B wave and it never went up. It never went up to make 76. We were expecting that it was going to get to 76 and it failed us. And they did as if they were trying to consolidate for more upside, but they never did. And the price came down to do C. Now, C had made 100 here. B made 61.8 here, and it broke a little. Now, it has made 100 here, and it broke down a little. It never did 123 here. I want you to follow me because it's not rigid. This is 123, and this purple level is 123, and this is, forget about this. I did it on the monthly time frame. I used this as a ladder. So just concentrate on the pink. This is where the price had touched down. This is 100. So price just got to 100. We can say this one is good for 100. Now, we may have finished with C of this zigzag, but then price may still want to shock us and come down to touch this area. Now, how many pips? Very few pips before this point, which price may do now or not. To get to that place is just like 88 pips, which is small for the price, and it could be big for you, but it is not what you want to. And if you had seen the way these things trusted down, you would have said, oh, it's going to continue and it will reach. So we don't interpret it that way, that it is going to continue and reach 123. Would it reach 123 or not? Because I don't know. I got out, immediately this thing got to 100. I got out of the trade. And it's better for me to get out and wait for structure because I know that C, because it's a zigzag, will not go beyond 131,800. But then, looking at this kind of structure that is almost completed here, it has completed this structure for me here. Getting to this is an extra. And without getting to 61.8 of the bigger picture, has told me something that, see, this is likely going to be a complex correction because the wave that went up that I showed you is quite an impulsive wave. So the correction is going to be more messier than what we are thinking. So now, and if you still remember that in the complex correction, if it's a simple triad, you can say it's a zigzag, and the fourth wave is going to go on. So we were expecting that this third wave is going to go on as wave 3, the beginning of wave 3. And that if you had seen this one as the beginning of wave 3, that this one is to come down as 3-2 for the price to go up. That is what I thought was going to happen. But now taking a keen look at the trade and the wave, I noticed that if the thrust up is wave 1, we have not even done 61.8. So that has suggested to me that we are going to be in a complex correction for at least another 2 to 4 weeks before we begin to see more upside. Now, what do I expect now from here? This, for me, is a gimmick. I expect a move, which is A, B, and C. And after that, we should expect an X. We should expect an X. I would rather want to wait until we see an X before I want to trade again. I rather want to wait until we see an X before I want to trade again. Because I don't know what the next triad is going to present. If it's going to be another zigzag, or it's going to be a flat formation, I don't know. And at the same time too, this X in the middle, it can be anyone. It can be anything. We are seeing the first one, which is, this is W now. If you are still following me, this is W. Because we have completed this wave, and this is W. This is W. So to complete this X, that's a single wave now. So we want to see X wave. So I rather want to wait quietly and see where this S is going to be. But we know either in double two or double three, double two or double three, which is, we said double two is 7 swing and double three is 11 swing. In either of these, we expect X at all time, X wave to W will be either 50 or 61.8 or 76 or 85. X does not go to 90 because we are correcting. So now, if that is the case, then the next thing I'm going to do is to take my fib retracement tools to see where X is likely going to be. And I'll be waiting for structure. Now, if the old W ended here, if the OW ended there, so a retracement, this is like X here, and I'm going to use something for X. Okay, let me use a blue for X, where we think X is going to be. So we are waiting for X on those 3 possible areas, or 5 possible areas. Now, X can be 85, which is at this point. X can be 76, which fortunately it's where this price touched here. You know, they have made a future point to touch this area. These are very wicked move. You know, that is where price may actually stop. Price may actually, X may actually get here. You know, to still try this point as the last. So if you want to wait for X, this is an area you might want to wait and see if X is going to get here. X getting here is possible, but it's like you want to risk just this little. So it looks like it's looking like that, but you have to look at the wave. So then, and this is 61.8 for sure, and this is 50. X had done more than 50, and because that one is taking, I can say that one is taking. So I can use that to show you that that one is taking. So we're still looking at this area, this blue, and this area for X. Now, funny thing is that this X that is going up may go up as what? As a zigzag. The X may go up as a flat correction, any of the flat correction, but definitely not a triangle, because I don't see this one ending the structure here. I don't see ending a structure because it's not an ending. So it's an X So a wave has to come after this one to end the structure because of A, B, and C. So if it's going to be, let's see the possibility of this trade. If it's going to, then it has moved from here to this point to come down. If it's going to be a zigzag, it means that price may not break this level again. And so from this movement to this place is one, then this is the second leg, and the third one, because the three-wave structure that we expect, then the third one should be equal to this length from here to here to get to wherever it's going to be. So if you take it that way, we are just assuming now. I'm not saying that that is what is going to happen. So it means that from here to the top here of what this wave had done to this level, so 100 of it is really at this golden yellow level, a little away from where we expect 76 to be. So that is what it looks like now. But definitely, everything still points to this zone when you look at what the structure had made. But we have to wait for this structure. It's a bit crazy here. A bit crazy on the 4 hour. You don't know what this structure is going to do. And we just said, okay, if it's going to be a zigzag, does it even look like a zigzag in the formation, in the making? So we need to do something to look at what the retracement of it is. Once it's beyond 50 or at least 50, you can say it looks like a zigzag. Now, this is 60, this is 50 here, it's gone beyond that. And this is 61, it's a bit beyond 61.8, which we can still tell you so far, it still is like a zigzag in the making. And the 76 is at this level. So whatever it is, it's still very early for us to say, because this might also go again and use this wave as a triad down to now form a double bottom before completing a C wave, an X wave. It's not impossible. It's not impossible. In that case, what we are saying is that if this wave should do like this and take this one as a 50 and go down to make an 100, because we are looking at the possibility of this one being the all of this one, 1, 2, and a zigzag to this point. This actually can end up going and do a zigzag down, which is 1, 2, and a zigzag down, before now moving up to complete X. And it could actually go down to now touch the area that we felt price ought to have gotten to, which is at 123 of C here. So we don't know what is going to happen. So you don't want to, these are things that you have to wait for this X to complete itself. Otherwise, you will lose your money here. Not until X completes, then I expect X to actually still go further up here around this area. Now, why waiting for this to complete itself? Because this may end up doing a 90 down here. If it did a 90 down here, then it can give me an 100 in the reverse direction, 100 or 61. And it can do a 123. But if it breaks down here, and it breaks down here, and it does like, so this one, if price now pulls down and did a retracement of this one at about 123, and it goes down to break 123, then I will expect now the price to push up to do a running flat or extended flat of 123, and price may reach this area. But all these are speculations. So when there are so many possibilities for price to do, you don't want to be in it. And that was why I said I'm waiting for more structures to form. And this is in the middle now. You don't want to trade this. And assuming that it's going to be a zigzag down, let's see, a zigzag down. Price had done more than 61 almost at 76. So the possibility of it being a zigzag down also is there. And if it's going to be a zigzag down at that level, a zigzag down at that level will look like from here down to here to this point. And 100 will exactly fall at the level that the price had reached before to make a double bottom and spring up. And if it's going to do it down, is it that or 123? 123 will be almost at where we expect the price to be at the first place. So if they decide to go bearish from here, so they are likely going to touch here to make 100 or 123 where we expected this one to have terminated in the first place. That would only make an extra, lower time frame correction in the middle that messes things up for us before price would move up to complete X. So we need to see what is going to happen here. So a lot of possibilities are possible, but then the only way we will know that price is still going to make higher up is to do this. We want to see when the first W is completely taken, and when it's taken, price may pierce it. It does not matter because it's an X. You must know that. So we can probably put a trend support in place to tell me to check price. I can put this trend in place to tell me to check price once that is taken. So these and these must touch. These of the first A and B must touch. And you know what we say, if it's in a correction, then we can also make this a channel. But definitely you don't want to use that and trade like that because of an extension that could get to this level. It might take you up, it might not take you up. Let's see. It might take you up, and it might get confusing, but using it as a channel, I would rather want to focus more on the trend on this one than taking this as a channel. So I want to focus more on this one because I understand that this is a zigzag and that I expect price around this area. So this is not complete. So we're going to have an X. I know that one for sure. What is in the middle here? It's a bit confusing. So let me go back to 4 hourly. Now going back to 4 hourly, we are seeing that this is where the price is. Price is at 50, and it looks so much like price is still going to go further. So once price crosses this area, I'm waiting and I'm anxious to see if price is going to return at the way it is. This is 50. Price may get here or not. Now price currently is using this if EMA 50 as a resistance around this here to still go further down. If I go to 1 hour, what am I seeing? Okay, price is like wanting to use this as a resistance or as a support to go up. So we don't know where price is going to move next. You don't want to see this one as a double bottom. It's not like that. Price may go either way. And this is an example of price being in the middle. Yeah, price may sprint up and complete your X and use this one as first leg of X, second leg of X, and the last leg just go up to complete at this level of price that I told you. That looks so easy, right? But price may also do the reverse and form a double bottom here, breaking through here or at 123 before now going up to complete, and that will make it more complex for us. So we have to wait. This is what we have. You can see on. Then once we now engage price from above, we are around this area. Whatever price is going to get to, but we know these are levels 1, 2, 3, and 4. I don't want to bank on this. I want to bank on this. I want to first see a reaction here. This is too small for me, a reaction. So, and this one has not, I know that this one has not complete X. So this cannot be a completion of X this way. It cannot be a completion of X. I have to wait for X to be completed, which may likely break W a bit up before we now have another 3 waves to the downside. And that 3 waves to the downside might just be what we touch 61 or 76 down. So we'll see how it begins to form. So when you trade from up here, it's you are more safe than just picking trade in the middle of nowhere. Now, because in the end, this may just be a 7 swing to the downside before we now begin to see with 3 or 5 running to the upside. So these are things I want you to see. So this looks like the first swing, 1, a 2, and a 3. We're going to see a 4 to complete X. Then we're going to see a 5, a 6 to the upside, and a 7 to finish it before we now begin to rally up. So that is what we should expect. And it's pretty much the same when you look at other ones. Using this to explain to you, CAD JPY, let me first go there and see what CAD JPY also looks like. They are pretty much the same. CAD JPY, pretty much the same. You can see, yeah, pretty much the same. An A, B, and a C. And this is in the middle of it. This one had gone up like a 5-wave structure. So we are going to see what it's going to be. If it's going to be another zigzag, this may end up being the second leg of this zigzag to go up might be anything. You know, this is like, this looks like a flat correction. That's the way it looks so much to me, like a flat correction on the 4-hour. This is CAD JPY. You can see. After this one came down. This one is like a flat correction here. You can see 1, 2, and a 3. And with this 3, correction is 1, 2, and 3. Price may be going more down. It's very possible that price will be going more down. This is like if you do this, it's like this is the first move, which is an A here, and a B and a C here. Forget this one. This one is just drawn thinking that price is going to probably move further up. Price may just do any of those. So price is almost touching here to break to X, but we are going to wait. Better to wait, not to waste money. And this is C and W. If you look at NZDJPY, that one seems to be a bit ahead. Now this is NZDJPY. The way it formed its own is an A B to the upside down, and a C down here. Price is seen trying to break this area. Or this one, you know, is looking like a bullish move for now. But we need to see 4-hour candle close above this line. So if 4-hour candle closes above here and above this place where you have seen this wave 1, then we are going further up. Then we can now take this one as one leg, the second leg, and the third leg is where we're going to run down again. So it is not going all the way up for this one. If you look at pound yen is like euro yen, that said. Pound yen is like euro yen, and you know, can you see? So pound yen also A, B, and C to finish W, and this is what we are looking for X. So we have to wait for this X. X in the middle, it's a bit. Even if you have sold it from, you have bought it from here, you never know. We try to run away from this kind of a wave that we don't know where it's going to end. Not until it breaks above and complete this mess here. If it breaks above, then we know that this mess is completed and the price, we can safely say, okay, this is the destination or the likely area it's going to get to up there. Now, which one again? CHEP JPY. CHEP JPY seems to be different. They're all doing different things. I'm just showing it. Doing different things. So you can see an A, a B, and a C down here. And this one is going further. It's almost at 76 here. This is like this is 61. It's almost 61 is here. I think it's going to break above here. And if it does not get to 76, that will be interesting. So, but using this move, an A, B, and a C, you might go further to get to this point. And this is the point we want to see if they're going to have a reaction or a strong reaction for a bearish move. And it might go a bit further up. We're going to watch those areas. But for now, this is still temporarily bearish until we complete the last leg, which is Y. Let's finish X to trade Y down. That is what I'm trying to say. I haven't said that which one. Okay, USD JPY. Actually, I'm still on this one. I'm still on this one. I'm out of orders. I'm still on this one. This one is completely different. It's just running down. So this one for me has done an A and a B. This one has not even completed his own C. C100 is here at 100, and this is at 123. If anything, it should still get to 100 and see if it's going to push down to 123. So I want to see if it's going to break this trend, but this is the trend that we're looking. So you may find price will come up here to find a support and trust down. So we'll see how things works out. So that is yen pairs. Now let's now look at Euro USD. Let's look at Euro USD, and that's where I'm going to finish today. Euro USD. We have been on this and for some time. We have been on this for some time. We are familiar with what is going on here. We are familiar with this, and this is like a whole month activity, you know. And like I told us, I remember I told us that the price is going to break below this particular one, and price did break below, and we're expecting that price probably will make a U-turn at a 100-pip extension when you compare this one as your A and this one as your B and a C, and price compromise that, price compromise that, and find probably a support, a common support here around this area where you had clusters of price. This is just a monthly week, you can see, and so we shouldn't really expect price to go beyond here for now. If we're going to see more upside, we should not expect price to break through 05393 on the monthly, but then we have to switch to the weekly to see what's going to do. 5393 on the weekly. Does it look like that? Does it look like that on the weekly? Yeah, on the weekly, anything is still possible on the weekly, and because this is 53, this is the area. Price may still work down. So the monthly, we need that monthly candle to close first before we say, okay, yes, we need next week or thereabouts for it to close to say this is what is happening. Now, the way this price is going up is in a corrective fashion. It does not mean that it's going to be bullish. Why? If you look at the bits, look at this particular candle. Look at this particular candle. There is a bit, just a small dot bit here, and that tells you that, and the way the price is moving up and they're pushing it down, so there's still much pressure. This is just the psychology and the motion of the market. So if there is a strength to actually go up, we would have seen it upside down. This week would have been below here, and the beat here would have been on the opposite side. When you see this also form here, it's just a correction. So when price is correcting, this is what I think to see. When you see the, look at this bit here, it's a correction. So, but if it's upside down, it can also be a correction if it's upside down and the bit is up and the wick is down. It might just mean that they might actually push and extend the correction. But it doesn't look as if they want to extend the correction too much because all other currencies are still under, pressure from the US dollar. But definitely we are correcting now. That is what I can see on the weekly. Now, if I bring back my lines, I bring back my lines, those lines they've been there for quite a while. From the analysis that I did, okay, let me just do something for you to see. I bring that those lines. Good. Now the blue area is where we expect C to be. So we still expect C here. And if you look at this blue area here, which is 100, price just make here's it a bit. This was where we wanted to enter, and price failed, was going to fail around here. We did enter here, and price is now making it back up. Now, so this is what the price is doing at the moment at that level. So you can see what the price is doing at that moment, at that level. Now, if we now go to the, if we go to the daily candle, if you go to daily candle, so we can see that price gradually is going up. Now, this is a recipe for an upward correction. You can see this triad 1, 2, and 3. It's a recipe for an upward correction. So we are correcting. So at the end of the day, this movement might be A, because I think 5 ended here, 3, 5 ended here. And after this, okay, this might actually be A. That's another way of looking at it. This might be A, and this one be a B, and we might be finishing a C. That is one way of looking at it. And we should be looking at this 50 EMA also, where price may likely stall. We should be looking at this 50 EMA to see where price may likely stall. If we look at 2 and where the price is at the moment, and we say this is the end of 5, which is 3, 5, and we say that this is where 2 is, we should expect from that place where 4 should stall. You can say if price 2 major is from here, and this is where 3 major has landed, we should expect that either here or here is where price should stall. So we might expect that probably price is going to stall at this point, which is 50. Let me change that to a red, and at least minimum a 38, which is here. If we look at it, but I don't see that in the making, so we might be a bit wrong, because price going as far up as this to 10,811 looks bleak. So we might be wrong to assume that 5 ended here. So 5 may have ended here at this top here, and we might be having A and a B and a C to run a bit up here. So it's better to think that way. These are possibilities. The odd is like we just want to still sell for now to finish, because what we're trying to do to buy against the trend now is still like you want to do correction. So you have to be very careful buying a correction. You have to be very, very careful. So what you want to spot, you want to spot where this thing is going to end, and you want to sell it. That's our goal. So let me go back. Now, so having said that, when we thought that this has ended here, 5 had ended there, and this is like A, and we said this is B. Now, and we said that if it's going to be B, one thing again that might not make it a B, let's see, is the trend, the extension. Up here, if this is A, this one being a B looks like it's not a B. It might just be the end of structure here to me. It might be the end of structure, that this is just a 4 and a 5 to end the whole of 3 here. The fifth wave of 3, which is 3, 3 and 3, 4, and to finish 3, 5 here, because these are the extended beyond what I would take as a B wave. So that nullifies it. This is most likely the end of the trade here. So we may be seeing an A wave up, and that is the way we are going to engage this. It's better for us to see this as A wave up, but we are going to be very careful because they are likely going to also a bit mess it up in the middle. Now, remember I was telling us that these are the areas that have to be broken. This is the daily candle here, this one here. I said it's an area that has to be broken, that has to be taken before we say price is now wanting to correct beyond here. So, and this had been taken, the first daily support had been taken by this price, and the price is still, across it because it's correcting. So this one will be seen as an A wave that is going up. But at the same time, the best thing to do is to look for the end of this particular wave that is going up and get off. We'll take something and let B wave come down. And if it's indeed it's going to be a B wave, we can say, okay, we are going to enter and treat it as a B wave. And if it's going to go beyond a B wave, we'll just lose small money. That's how to trade it. And if C is going to go up, then it's going to be a good buy for us to exit and sell it down. So because it might also be a complex correction in the making. But the way it's going up, this is not the end of this trend because it's going up collectively, like we saw with the yen. It's going up collectively, and so the B wave might also come down in a triad, and a C wave may now go up impossibly to get to this area. This is where I'm looking for a support at this level. I'm looking for a support at this level, sorry, a resistance at this level for price and eventually. But I don't think that this wave is going to get there. So now let's look at the smaller time frame to see what is happening. Now, unfortunately, I had been around here, so I thought this was going to come down as 61.2 to pick us, and it didn't. So this is what I'm looking at now. So the price came down here, and these movements started and is going gradually up. This is an impulse that broke this daily support on the resistance, and resistance, and the price is going further up. Now, what I can see here now, it's like a 5 wave of which is A and a B, and we are going to see the last leg of the, which is, if this one is from here to here, and this is the second wave of this correction, which is a triad, and this looks like a 5 wave up, and this like a zigzag to this point, and this is another, probably going to be another 5 wave up. And if that is going to be the case, we expect 100% extension and to get out. of this trade and to wait for the next thing. So what I'm saying is that in that case, if this is wave 1 and this is wave 2, we are going to have a wave 3. So, and if we have wave 3 and wave 5, we should be looking at exiting around this area. So if we exit around this area, if price should get to this area, this will be a good point to actually exit the trade and watch what is going to happen to the downside. If we get a price action, we may begin to sell it to the downside. Not until the price crosses this trend support, it won't be done. Now, this is a trend that is going on, though collectively. It has to be broken by price. It has found a support on it and it's going up again. It might not get to it to find the support because this is at 61.8 for now and at 76 or thereabout, and this is like 85. So if it gets to 85, which is where you have the red, I think that may nullify it being what I'm thinking. So if one starts from this point and it gets to this, sorry, I don't need to pick this one. I'm looking at this correction here to see what it has given us. Good. And this is like a 50. Yeah, actually it's stopping at a 50 and this is like a 61. So the price may actually push back at a 50 here. From what I'm seeing here, it may actually push back at a 50 to go further up or still trust down, but I don't expect it to go beyond here. Price may not break this point to go further up. This is like 1 and a 2. Let's look at where 85 is going to be, because if that breaks 85, then it is not wave 1 anymore. So 85 should actually be somewhere here, and this is where I don't expect price to break. In fact, price should not even get here in the first place because it would have broken the trend, and once this trend is broken, then it looks somehow again. So we have to continue to watch what this is going to be. So taking this as A and a B wave, we are going to see that this, to make 100 from here to this point, where A ended, back to the B, where B found a support, that place, our 100 will be, somewhere up here. Our 100 will be here, and our 123 will be here, to be here. So that is where we are looking at price for now. So we should be looking at 06780 as where price may stop, and the price may also crawl to this side. We need to continue to watch what price is doing in those areas. On the smaller time frame, you can see it much better. Okay. I think on the smaller time frame, it's a bit much clearer for me to know where it's going to be. On the smaller time frame, it's a bit more clearer for me to know where it's going to be. Let's see. It's going to be a bit more clear for me from here to here. From here to here, then down to this point. So it's correct. It's still correct. 100, and so it's still correct. It's still correct. So in the end, we might still have this as a whole correction of A, though we are doing A and B and C for now. That might now make it an A. We might now have an X to the downside, and we shouldn't expect that X to go beyond, if we're going to have a complex correction, to go beyond 85.4 before we now have, that would now be a B, and or an X, then we now have the last triad up to go up, if we are going to have that, before we now do the fifth wave and complete it. So anything is still possible. We're going to see how everything is forming. So that is what it is now. But it's best to treat this as if it's going to end, and would exit this way and probably follow an X down. If it's going to be an X down, if it gets to 85 or 76, we will look at the price action. If we're going to thrust upward to now form the last leg, we will know. I haven't said that this is the end of today's training. Kindly go ahead, watch the video over and over to understand all that I've said, and the reason why we have to wait at times and you don't trade, you know, everything, because even in this correction, you don't know what price is going to do. So there's no way you would have thought that it was going to do this and do this, but not on this until this structure completes itself. We might not have an idea of what is going to happen next. So, and if this one completes itself, the most crucial structure that you want to complete itself again is the X. And when that one completes itself and gives a price action, then you can now tell ourselves that we are going further up, you know, in our correction before. So you might end up doing also a 7 swing before we see more downside. All right.